Okay, so welcome to the IMR of 29th May. It's been an interesting week. So basically, our quarterly results are over, or the annual results are all over. There's really not much left. So one of the news as far as the annual results and quarterly results is concerned is to know that this quarter's growth has been half of the similar quarter last year. Right, so that is something. GDP out reports were out at around 7.3%, which is, I guess, okay, nothing great, nothing bad. And then we had, I think the highlight, if there was a result, something to really think about, is I think HPCL gave some much better than expected results. I just want to remind us all that we've been talking about this oil and gas theme for I think almost a year now, saying that it's a positional view in terms of the fact that the subsidies are now over, it's free pricing, the country has gotten used to it. Looks like we've got two price hikes where diesel petrol has gone up by almost 5 to 6 rupees a litre in the last two price hikes, and there hasn't been a whimper of protest. And I think the country, the population has gotten used to it, and that's good. So the profitability of these companies, I expect, is just going to get better and better. And this quarterly result from HPCL is just one case in point. Having said that, I think there are some mixed expectations or mixed opinions about ONGC and oil. Not sure about that, so just something that you may want to look at. Apart from that, so the Modi 1 year is over. People have, I think, maybe better expectations now. A lot of news in the newspapers that the industry is willing to be patient uh, for some more time under the leadership of Modi. So we'll just have to wait and see about that. I guess there'll be a lot more attention to action rather than talk going forward. Apart from that, there is 5.5% correction in Hang Seng today, which is quite big, quite sharp. Whether that sets the tone for any other corrections across the world, I'm not so sure. We've seen news of late that stocks in Hong Kong Stock Exchange having fallen by 50% for apparently no reason, but the same stock has gone up by 350% over the last 1-2 years, again for not any great reason. So is there some sign of trouble to come, or is it just the norm? I guess it's just something to watch out on. So these are some of the things that come to my mind. Of course, next week is RBI policy, and 0.25% cut is already baked in, discounted into the prices. What would be a big surprise is that if there is a 0.5% cut, which some people are saying is entirely justified now, but we just have to wait and watch. And beyond that, I guess, is the monsoon season, and on that, the El Nino is causing concern. Australia, America, and there's a third country, I'm not sure, I think Canada. All the Met departments of these countries have raised concerns for the El Nino. So as far as North America, etc. goes, it causes excessive rainfall and flooding is possible. And there's recently very heavy floods in Texas. But for India, it's the opposite. We might get a dry spell, and there are concerns. The Indonesian government has taken some action, or is being urged to take action rather by the IMF to start importing grains, because if the El Nino starts to hit badly, which is expected, then there are those great ramifications. Now, what happens for India? I'm not sure it's there out in the papers much. Not that I've been reading papers much. So if that impact happens, then there could be fallouts on how the Indian monsoon proceeds. As of now, it's expected to be more or less normal, but I guess only time will say. So these are some of the things. Apart from that, oh yeah, there was Greece saying they cannot afford repayments. I'm not sure exactly what the consequences of these are. European and Greek bonds get some drama on that account this week, but I think there's definitely more trouble to come on that account. So that's something to. Though it's been going on so long that maybe people will just say, "Thank God these guys have left," and forget it and move on. The European public, especially the German public, like we all know about, I think a month back, full full page adverts against Greece and Greek attitude towards loan repayments in the in the German mained newspapers, and maybe it's just a gradual process of adjusting and having the public accept the inevitable that's been going on in the background, and nothing really will happen if Greece perhaps leaves. So that's just an opinion. We'll have to see how that pans out. So broadly, this is how it is. I just want to start this IMR with um, the global markets and see how they have been in view of how Hang Seng has performed today. Sorry. So let's look at Dow Jones. We looked at it in March last year. Sorry, this year. And you can see that it's actually not much further higher up from where it was 2-3 months back. And what you should be seeing on the screen is the Dow Jones, and it's done a rounding top of late in May. And if I zoom in, so it is at its life high, right? But really can't say that that uptrend is really now strong or intact in my opinion. And clearly you're getting more doji spinning tops there, and this is almost like a tower top in terms of candlesticks. So you have this few big Marubozu type candles, green ones, and they're getting this big red one, strong one. And it seems like 18,250 or thereabout could be a top. This 18,200 level seems to be something that is not willing to go in beyond. Also remember that it's getting hot in the US in terms of the political climate. The next US presidential election coming along next year, and the nominations beginning to happen, and candidates there are taking positions and sticking their necks out. So that might just sort of cool off expectations in US for the next several months till the next election is out of the way. So that's long 1 year of time frame to keep in mind. So that's the Dow Jones. If you look at the long term, the broad market index of the S&P 500, then you can see that again from February March this year, it really hasn't done much, and is, I wouldn't say stuck, because it has been attempting to make new highs around 2,120 for the last 4 months, and not much action beyond that. This could be a rising wedge that you're seeing at the end, and we all know that rising wedges are not really good signs. If I go to weekly here, then what you see very clearly on the weekly chart is a lot of shadows basically. If I just get that out of the way, you'll see a lot of weekly shadows in the last 4 weeks. Shadows are always a fight between bulls and bears. So the bears have clearly become a lot more active now in the last 1 month in the US, and that doesn't seem to be heading much higher. The volume picture in this is actually not very reliable. It comes from a free data source, so I'm not sure how good it is, but the price is fine. And you get weekly moves like this. It doesn't harbor. I mean, the uptrend strength is clearly weak now, and you can't really depend on the US going up. So that is the view on US. If we go to DAX Germany, then you can see that that's also really not done much at all, and it's gone up. It's made a new life high, right? Yeah, it's made a new life high, and then it's gone into a small correction. Can't say at all that Germany is in a downtrend. It's definitely still in an uptrend, and after the breakout of the 10,000 mark and going to the 12,000 mark, this is just a probably just a small correction in the market, and really nothing much more than that. It could very well rally back up. You can't rule that out as far as DAX is concerned. So Germany could still, I think, do well and go back up. If you look at the FTSE, where is it? The computer seems to have slowed down. Okay, so that's the FTSE that you can see, and you can see that from May of last year actually, 13, 14, so this is weekly, remember that. So from May of last year to even now, it really hasn't, 2013 May, sorry, it hasn't really done much, more or less sideways, has broken out of that 6,800 level of late, and to that extent I would say it's slightly bullish. So there is the chance that it could still rise, can't rule that out for sure. And after the British elections have been a big surprise, with Cameron coming back with actually quite a healthy mandate, and that Ed Miliband, his sort of co or junior PM, had to resign because his party did really badly. But this, at best, this could be a flag, and this could still go up. So FTSE, I would say overall is positive. So DAX and FTSE, the main ones there. Then you have CAC, which shouldn't be much happening there. Hmm, too long, too long. Okay, you should be seeing the Hang Seng Index now, and over almost what 5 6 year period, it's only gone up of late in the last few weeks. So actually, this is not really a big deal if you look at it that way. It's done a major multi-year breakout, and then from after doing that multi-year breakout, what it's basically done is, in my opinion, done a correction. So that's a multi-year breakout that happened in April. This is a weekly chart, and then it went from almost 25,000 to 28,000. That's almost a 10% move, most of which happened in 1 week, and then it's just going sideways. Um, Assuming the volume picture here is reliable, breakout happened on higher volumes, it's going up, it's going sideways, and this big candle here may actually not be much of a concern. So fine, Hong Kong 5.5% down, but overall doesn't seem to, it's not, according to me, a big concern. So that's looking healthy. So the last one is I want to look at Nikkei. Okay, so Nikkei clearly heading up, up, up. There's some major data problem here. Just unfortunately messed up the chart completely. So if I reset this, it's probably 0, I think here. Okay, whatever. So Nikkei has been making multi-year highs. Unfortunately, we don't have the full data here, but it's made a 15-year high, and it continues to do that. Okay, and well, it's just going up. So I think the Hong Kong thing is just an aberration, in my opinion. Overall, the global markets are looking, according to me, quite healthy. Really, not much of a concern there. Right. So I'm just going to close this, and then we'll get our meta stock up, and we should be able to look at that. Alright, so you should be able to see the Nifty chart on your screen, and there's definitely something extremely interesting on the Nifty today, which is the volumes. Exceptional volumes, and if you have a look at it, I think it's the highest volumes for what, since perhaps February of this year, right? And even then, it's just one of those very unusual days. And if you go back, today's volume is on an average, if you look at it, May June of last year. So something definitely is up now, given that expiry is over, and I don't think we see post expiry volume spiking up like this. So the market has, something's happened, and we definitely need to look into this. Given the way that the market today has moved after expiry, I think all bets are off in terms of whatever previous views we had. Today's market has brought it, today's move on the market on very, very healthy volumes has brought it close to that downtrend line, and all looks and intents, it looks like it's a breakout move, and a very decisive move that has happened today, which could take the market up, which is I'm actually very surprised. I'm very, very surprised. The 150-day moving average is just exactly where the market closed today, almost. And if it goes up another 100, 150 points, then it's clearly on a strong uptrend with the sort of buying that has happened today. So you'd want to probably look out for that. Which makes me wonder whether we are possibly looking at the market going back to its life highs in the way that it has moved, and I am therefore have to completely relook at the whole notion that we could be looking at. It's still not gone, which is the multi-month sort of top on the Nifty. If you look at this weekly chart candlestick simply, then this is something that we had mentioned last week, which is whether we could be looking at a head and shoulder breakdown from something which happened from October last year. And actually, if today, given today is a Friday, then at best you've got um, a dragonfly doji. So strong bull bear fight, no doubt about it. If you make this a line chart to get a better perspective in terms of long term, and this is where our trend line would be, right? That's the neckline, you would connect this and just extend that, and I would say we are just there. This is looking, I think the head and shoulder top now looks even more convincing. But what is interesting is if you take today's move only and the volume associated with that and the strong up move. So this is the same big multi-month head and shoulder we're talking about, and today's move is something that takes it very close to the trend line rather than neckline, and it will be very important to see how it behaves at this point next week. This doesn't look like a bull trap anymore as we were mentioning it last week, but I can't rule that out completely, and I really need to look at how the 8,500 level or not even 8.5, probably, yeah, around 8.5, 8, 8,450, 8,500 gets taken out, and that will really be an interesting thing to watch. I think Vidya, if we can track OI every day, no? So okay, but so now the option pane is showing what now? That option chart 8.8 is that resistance. 8.8, right, for this month on the option chain analysis. 8.8 is the where the resistance is, and you were saying, and 8,000 was the biggest support. And it's right sort of in the middle of it. But with the chart like this, with today's move, the downward bias is not there. It's up again, and I'm surprised. I'm just given that overall way the market has moved in the last few weeks. So I don't know. It'll be interesting to see how that might change every day, even though we're not close to expiry. Starting next week. So it's like a very iffy sort of situation. Okay. So fine. Good to really watch and perhaps be just aware of this and see if a move happens. Because if a collapse happens from here, when I say collapse, even if it goes back to 8,000, I'm saying, I think that will really flummox the market because what I'm basically caught up so much and I'm blabbering too much perhaps is the volume today. It's exceptionally high and the market's gone up, and that indicates very strong buying. So has something fundamentally changed in the mood or the views of the market by the big players is the question that is going round and round in my mind, and I'm not getting an answer. So, well, I guess we just have to wait and watch and see what happens next. So it's coming back, in my opinion, to that neckline. That's still a resistance, and if that resistance holds, and if it were to go back down, then this time it may easily crack that 8,000 level and go lower. But on the other hand, if it is going to reclaim that resistance as a support and it successfully stays above 85, 8550 for a week or two, then one could expect a rapid move, I would say, all the way back to 9,000 on the Nifty. In the meantime, 8,800 is a big resistance if you look at option change data for the Nifty. But even if you look at that, 8.5 or from where it is now at 8.433 to 8.8, you're talking about 400 points up move, and that's quite a substantial thing. You're talking about a 5% up move on the Nifty, right? So yeah, the market of course always knows much more than we do. So the mind is all about racing to figure out what it is. It's just that hunger for an explanation, whether it's right or wrong, often doesn't matter, as we know in terms of psychological biases. Okay, so that's the Nifty view, and so out go the shorts. So let me, make a note here. Oops, in our notes, very very strong up move by the Nifty today on exceptionally high volume. Right, so no bull trap, question mark, Will it? Okay, option data 8800 and 9000, significant resistances, significant high OIs on the calls. Let's just put it that way, right? Okay, so mm, this is something to keep a note of. Let's see how the individual sectors have performed now. So we'll start with CNX Auto. That's also showing a very healthy move. And if you look at it, it looks like it really just came, not just, it just, yeah, just not, just on Thursday, came to that support as you can see, and then just, moved up very strongly today. I think there was some result by M&M today, which was quite favorable, and that could be one reason why it's gone up. Then capital goods. So this is also capital goods at a very important threshold, which is that sort of pink line you're seeing, which is 2010 to 2015 resistance line. So this is a multi-year resistance, which it has been able to move back, or just is exactly at that level. And also the moving averages are clustered there. That is the 50-day moving average. Just below that is the 100-day moving average. And if it can break beyond 17,000 and break this downtrend, then we could be moving to substantially higher ground in the market, right? So this is something else to keep in mind. Okay, so that's the capital goods side. Then we have FMCG, and that's also done really well. Come off a multi-month support level at around 7,650 and then turned up. Healthcare also not as strong a candle as others in proportion. Capital goods is much better, Nifty is much better, FMCG is much better. I'm talking about today's move only. Right. So metals, well, that's still a drag. Very clearly, not been able to move beyond that 9,850 mark. Could be struggling there, and could be still a sector that underperforms the overall market. Okay, mid cap index has also shown a very healthy move. Almost 2 weeks of sidewards trend have been absorbed by today's move, and so going to the mid cap PSU index, I mean BSE index. If this is a flag, and this could be from say 10,000 to about 10,700, and this is an up move out of the flag, you're talking about another 6% move that could happen, another 600 points that could easily take it to, back to its close to its life highs on the BSE mid cap. So that is really interesting. Then we have the PSU index, which is also really gone up through the downtrend line this time, and that is showing strength. The indicators are showing a lot of strength. Then we have the small cap index, which is showing strength. Okay, the bank Nifty has gone back up in just back to a very important resistance level of 18,600, and could easily break out from there and go to 19,500. BSC power, okay, so that's got a filled green candle, so that's still a laggard, but nonetheless showing strength. BSC reality, that's a big surprise. It's the first red candle on the sector indices that we've seen. A lot of drama going on between bulls and bears at this point here. And then we're coming to the CNX set of indices. CNX IT index, really nice move from 11,500 up. Nifty Junior, same thing as the BSE mid cap index and showing a lot of strength. Energy, well, I'm surprised. CNX Energy, not much of a move, still showing a sideways trend in spite of HPCL. But like I said, I think ONGC had some mixed results. Uh, hmm, Infrastructure. So that's clearly moved up today. Very, very healthy candles on that. Pharma, PSU banks not doing that well. Bank Nifty did well, so that clearly private sector banks have done well, but public sector banks seem to be a laggard for now. Okay. And then we are back to the CNX Nifty, and really nothing much happening here. All right. So sorry, CNX Nifty at I think very crucial junction of whether it will break out or not. So this is very, very interesting. All sector indices showing some strength or the other. In the last 1 week, the market's mood seems to have changed to bullish infra, capital goods, IT, and private banks, and also FMCG. All good, strong Marubozus on good volumes. Right, so long only is the question. So I think capital goods or infra was it that broke the downtrend line? No, not this. Which was that? Mm, this one I think. BAC PSUs. Capital goods. Auto. Okay. So everything and a lot of these, half of these have are at or have done a breakout of an important resistance or downtrend line. So this is really, really curious and surprising as to the strength of this move. So something that we need to carefully reconsider all the uh, bearish views of last week, and we really need to get into individual stocks and see if the volumes are showing up there, and if there's any other data news, or what is it about the future. Is the monsoon expected to be really good? Is the bank rate going to be more than something that we are anticipating? But there's something which is definitely there. Right? Okay, so want to emphasize here that the prior move or the prior view. So when I say that, or let's make it clear, last week's view of a bull trap with 7,700 target on Nifty due to the 7-month head and shoulder top is now what shall we say, is now, I wouldn't say nullified, is now at risk of being totally negated if Nifty does a breakout of its neckline above 8500 on good volumes. If that happens, then it's only longs. Right. Across all sectors. So it will be really important to see how this pans out next week, sorry, because this sort of a radical change in the expectation of the market doesn't happen very often, and we need to get more information on this. Okay, so we'll stop here. Something to sleep over, I think, and we will continue this and try my best to finish off the rest of the IMR tomorrow, and maybe we'll look at not just the Nifty stocks but also the Nifty junior stocks to see if there's some particularly strong action somewhere which we might be missing. So I think, Bobby, this whole thing about waiting for 7,700 and then re-entering into the market is something that we may have to review. So that list that you have of defense stocks and whatever else, I think we need to spend a lot of time on it urgently to see if we might be getting some immediate buying opportunities in the coming few days or 1 or 2 weeks. Earlier we had this thing that, okay, let the market go to 7,700 and then we can sort of go there, and we said it might take a month or two, but if this now completely changes, then we won't have much time to look for or we won't have the luxury of time to gradually review the whole story, right? Okay, so anyone, any opinions?
Anyway, I think after the rate announcement, we'll know.
That's
So I think that will be the
just
deciding
next
factor.
Tuesday. Yeah, I mean, so that's just it's literally one business day away. Saturday, Sunday we are closed. Monday we'll have a pause mostly, and Tuesday will be the news. And not expecting Raghuram Rajan this time to do some weekend midnight surprise on the rate cut. He'll probably just be a good boy and do it on Tuesday. Yeah. Okay.
Okay.
All right. Okay. Great. So we'll catch up in class tomorrow, and then we'll also maybe do some analysis in the class, and then we'll have a full webinar later. Cool. So thank you. We'll catch up tomorrow in closing part 1 of IMR this week here. Catch you later. Thank you and good night.
Bye.
Bye.